Today, we're diving into a really high-stakes situation brewing between the US and India. It all comes down to a single ultimatum over Russian oil that could seriously shake up one of the world's biggest economies. So let's get into it and see what's really going on.
The analysis we're looking at uses some pretty strong language. It talks about a dark cloud hanging over the Indian market. And that's a perfect way to describe the kind of uncertainty and, frankly, fear that's gripping investors right now.
So what is this dark cloud really? This isn't your average everyday market tip. No, this is something much bigger. We're talking about a head-on confrontation between two global giants. Okay, so this whole thing really boils down to a geopolitical standoff that is completely spilled over into the economy. And right at the heart of it all, Russian oil. And here it is, the absolute core of the problem. The United States has put India on notice, and it's not subtle. It's a direct ultimatum. The demand is crystal clear. Buy less Russian oil. And the threat? Well, it's just as clear. If you don't, you're going to face some serious economic pain.
So what does severe economic consequences even mean? This isn't just some vague threat you hear from diplomats. No, the threats here are very specific, they're escalating, and honestly, they could be crippling.
First off, you have to understand the starting point. Indian goods heading to the US are already getting hit with a 50% tariff. That's a huge burden. It's a combination of a reciprocal tax, sort of a tit-for-tat, plus a direct penalty for those Russian oil imports. So things are already pretty tough for Indian exporters, even before this new threat.
And this isn't some backroom negotiation. We've got a recent, very public statement from the US president that makes the threat feel incredibly immediate. It's that phrase, very quickly, that's sending a chill through the markets. It signals this could happen literally any day now. Okay, so if you thought 50% was bad, get ready for this. The potential next step on the table is a mind-boggling 500% tariff. Let that sink in. We are talking about a 10-fold increase from an already painful number. A move like that would be absolutely catastrophic for entire Indian industries.
And just so we're clear, this is not an empty threat. It's got real legislative teeth behind it. There's a proposed bill, the Sanctioning Russia Act of 2025, that would give the president the explicit authority to slam these massive tariffs on any country that seemed to be funding Russia by buying its oil.
So, with all this political chess going on, how is it actually hitting people and businesses back in India? Well, the market's reaction tells a very, very clear story. You can see the winners and losers almost immediately. Reliance Industries, a massive oil refiner, took a huge 4.5% hit. The whole IT sector is down 2.5%. But look over here, pharma and healthcare are actually up. So why is that? Why the big split?
Well, this slide breaks it down perfectly. The IT sector is getting hammered because, well, where do most of its clients live? The US. They earn in dollars. So any tension is bad news. Reliance? They're an oil refiner, so they're right in the eye of the storm. And then you have other exporters, textiles, auto parts. They're already struggling so much that they're offering 20% discounts just to compete with the current 50% tariff. Okay, so if you're a trader or an investor in the middle of all this, how do you even make a decision? Right now, everyone is just desperately looking for any kind of signal, trying to figure out what on earth is going to happen next.
So traders have their eyes glued to three main things. First, any new statements from the White House, hoping for some cooling down language. Second, they're watching the big money. Are the huge foreign institutional investors, the big overseas funds, are they still dumping their Indian stocks? And third, they're watching where the money is going. If it's flowing into safe sectors like pharma, that's a huge sign that investors are still really nervous. The source material actually coins a term for what's driving all this, the Trump factor. And it's this bizarre phenomenon where a single, informal statement, maybe even a tweet, can completely dictate how the market opens for the day. It just bypasses all the normal channels and creates a level of wild unpredictability that markets absolutely hate.
So what's the game plan for traders right now? It's a strategy called sell on rise. Basically, it means nobody believes that any good news will last. The second a stock price ticks up even a tiny bit, traders sell it off because they expect it's just going to fall right back down. It's a deeply pessimistic view of the future. And you can see that pessimism right here in the numbers. India's main stock index, the Nifty, is hitting a brick wall. This zone, between 26,300 and 26,400, is acting like a hard ceiling that the market just can't seem to punch through. And it probably won't until there's some genuinely good news. And all of this brings us to one final,
big question. When you strip away all the charts and the political maneuvering, when the grand game of geopolitics crashes into the hard reality of economics, who is it that really ends up paying the price?